Hey, what's going on, everyone? Welcome back to my channel. I am Joe. With everything going on in the Ukraine and Russia and the market having pretty much basically collapsed, I kind of wanted to go over historically what it is that the market does at the beginning of war, but then later on what happens to it. And we're kind of seeing it right now. At the beginning of war, when Russia invaded the Ukraine, the market pretty much took a plunge. It just nosedived. It's recovered pretty nicely this morning. Bitcoin's up 10% to 39,000. Ethereum's up 12% to 2,700. Algorand's up 11% to 80 cents. XRP's up 11% to 71 cents. Look at Yieldly. Yieldly's up 15%. So the market is starting to recover, and traditionally that's what happens. And generally the fall at the declaration of war and the start of hostilities is when it falls, but then usually, historically, pretty quickly, the prices rally, and when they rally, they go up by quite a bit. So this is a bit older, so I'm skipping all the introductions because it has to do with the Iran crisis. But this is from a wealthofcommonsense.com. In the 6 months following the onset of World War I in 1914, the Dow fell by more than 30% because the war basically ground the business world to a halt, and market liquidity all but dried up. That's right. If you don't have liquidity, you don't have nothing. I don't care how good your project is. I don't care what you can do. If you don't have liquidity, you don't have anything. The decision was made to close the stock market that year. This lasted for 6 months, the longest such period on record. Making up for lost time, the Dow rose more than 88% in 1915 after it reopened, which remains the highest annual return on record for the Dow Jones Industrial Average. In fact, from the start of the war in 1914 until the end of the war in late 1918, the Dow was up more than 43% in total, or around 8.7% annually. Because it always recovers. It's that initial shock. It's like when you jump into a pool and it's really cold. You jump into the pool and you got that initial shock and you take that breath and you're like, whoa, is it cold? But then as you start moving around, you start warming up and you get acclimated to it, and then you're like, okay, this isn't so bad. And then you're only cold when you get out of the pool. World War II had a similar counterintuitive market outcome. It's not counterintuitive, it makes perfect sense. Investors don't like fear, unknown, and doubt. FUD. They just don't like it. They don't like when things don't go their way, and they get greedy, and they get scared, and then they get all kinds of other weird emotions and human things that happen. But the market always recovers. It always has, and it always will, unless it absolutely gets devastated down to zero and disappears. But I don't see that happening. Hitler invaded Poland on September 1st, 1939, setting off the war. When the market opened on September 5th, the Dow shot almost 10% higher that day. When the attack on the U.S. naval base at Pearl Harbor occurred in early December 1941, stocks opened up the following Monday down 2.9%, but it took just a month to regain those losses. When the Allied forces invaded France on D-Day on June 6, 1944, the stock market barely noticed. The Dow rose more than 5% over the ensuing month. From the start of World War II in 1939 until it ended in late 1945, the Dow was up a total of 50%, more than 7% per year. That is, wow. Imagine being able to go back then. So during the two worst wars in modern history, the U.S. stock market was up a combined 115%. And that's the big stock market. That's the big money. Imagine if that was in crypto, 115%. That would give us a boom leg up. I mean, that would start a precedence. The Korean War in the summer of 1950, when North Korea invaded the South. That conflict ended in the summer of 1953. In that time, the Dow was up an annualized 16%, or almost 60% in total. When war starts and nobody knows how it's going to go, and everybody's fearful, there's a lot of unknown, and there's a lot of doubt, investors like to pull out because they don't know. They like to surround themselves with dirty fiat like a blanket to protect themselves against the world. But then once they get acclimated and they realize, okay, yes, we have gone to war, this is happening, all right, everybody kind of takes a breath, takes a step back, and then the stock markets go up. And not only do they go up nicely. No, thank you. I don't want that. Whatever. U.S. troops were sent to Vietnam in March of 1965. The Dow would finish the remainder of that year up almost 10%. By the time the last of the U.S. troops were pulled out of Vietnam in 1973, the stock market was up a total of almost 43% in that time, or just under 5% per year. 5% per year. That's decent. The Cuban Missile Crisis had the world on the brink of nuclear war. In October of 1962, when the U.S. was facing off against Russia, the confrontation lasted only 13 days, and in that 2-week period, the Dow remained surprisingly calm, just losing 1.2% for the year. But then it would gain 10% later on. What's the moral of the story? Fear, unknown in doubt. That's one of the reasons I put little stock into chart analysis, because all chart analysis is human emotion analysis. The stocks will always follow human emotions. That's why the majority of people fail in the stocks. They fail in cryptocurrency. Something like only 2% of people are actually successful in trading and cryptocurrency and stocks and whatnot, because it requires you taking your emotions out. And when war starts, people are sad. I've got relatives in the Ukraine. I wish them all the best. I'm sad. I wish it hadn't happened. But then as time goes on and it acclimates, people realize that life goes on and the stock markets recover. So don't panic in this time. Don't spend more than what you can afford to do without. As long as you do that, then you're going to be fine. You can sweat the dips because you don't need to pull out that money. It will recover. It always recovers. I thank you for your time, and I will see you guys on the next one.